Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, March 6th at about 1 p.m. Eastern. Well, most of the major S&P 500 sectors are lower so far today, with financials leading declines among the major sectors. Energy is higher, however, with oil prices spiking again on the continuation of the U.S.-Israeli war with Iran, now in its seventh day. Also, after the jobs data came out this morning, traders boosted expectations for an interest rate cut of at least 25 basis points from the Federal Reserve at its June meeting. We will see. And now let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $674.29. That's 3% right here, 3% below the all-time high at 697 set back here in January. Now the SPY, of course, now since it's down, it's trading below the 20-day moving average. The red line is coming in at 686. The 50-day is just up here overhead. The green line is coming in at 688. And down here, though, we can see the 200, it's still over the 200-day moving average, which is coming in at 656. Now, from its April lows almost a year ago, we can't see that on the screen, but from its April lows at 481, the SPY, and that's nearly a year ago, as I said, has been walking up its 20-day moving average, the red line, in an uptrend, higher highs and higher lows, until it hit this October all-time high up here, and that came in at 690 right here, and that was at that time a 44% gain, so that's pretty good. Now, after that high right here in October, the rally started showing signs of fatigue, and then it fell back down here. It fell down to 652. Actually, we had a little warning here to 653 in October. But the SPY rallied after that to a new high, but then fell back down here to 652 in November. Then it gained, then the rally gained energy once again, broke up back through the 50-day and the 20-day up to at 689. Then it dropped down here to the 50-day to 671. Then it rallied up to 696 again here in, that was a new high in January. 696 was the new high. Then it fell back down to like about 576. We kept this high, it rallied back up to this high to 697 and then fell back down. So almost started trading in a range here in the last couple of months. Then made a lower high here and broke down then finally to where we are now here again at 674. So we can see here it was trading in this sideways action, now trading in this. We've got the lows down here at 676, and then it broke even below those lows earlier this week. And again, now we're still under that 676 potential support level. What was support becomes resistance many times. So again, we're down here at 674. So our question is from here, can the SPY pivot here? Can it break to a new high? Or are we going to have to pull into a rest stop here for maybe a month or so? We'll have to see. With all we have going on here, I think that being ultra careful is a good idea. We've had a heck of a run here. Market's been going up for almost a year, had a heck of a run, and this is not, in my mind, a good time to get greedy. We do have resistance here again up at these moving averages. at 686, and the 50-day again at 688. That might be pretty strong resistance. As you can see in the last 2-3 weeks, that these moving averages have acted as very strong resistance. We'll have to see if we can get through that. We've got this pivot up here at 692, and then of course up to the highs at 697. Down here we have support. We have support down here at 66, potential, not fantastic, but potential support here at 669. Then again down here to 670, then 671, if I can draw a line that strong. Then the 200 days coming in here at 656. And so going into next week, we have the CPI and the PPI. Consumer Price Index and Producer Price Index. Those may be calm, relatively speaking, to everything else we have going on. So anyway, please do keep an eye on your protective stops. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the index, the ETF that follows our NASDAQ 100, which is the top 100 non-financial stocks in the NASDAQ stock market, including all the large cap momentum stocks that we talk about, Magnificent Seven and so forth. Now, when I captured this chart today, you can see right here, when I captured it today, the Qs were trading at $602.40. This is 5% below the all-time highs touched in October and January. Here's October. Here's January at 697. 637. So it's now trading below, of course, its 20-day moving average. The red line is coming in here at 607. The 50-day moving average is coming in at 615. But fortunately, we're still above the 200-day moving average, which is coming in at 588. Now, we know, we can't see it on this chart, but we know that almost a year ago, the Qs made an April low last year at 402, and the Qs rallied from there, and like the SPY, only in a much more dramatic way, because the Qs, the big momentum stocks, really caused the Qs to be very dramatic. But at any rate, the Qs made an incredible uptrend from the April lows last year, walking up the 200-day moving average in an uptrend to the October high. You can see up here at 637. And from those April lows last year to this October high was a 58% rally. So, I mean, that's fantastic. Almost a year, 58%, nothing wrong with that. Now, from these highs, at 637, the Qs dove down, couldn't keep going anymore. Qs dove down here to 585 in November, then rallied back up to 628 in December, then fell to 600, then rallied and consolidated before going up and retesting these highs at 637. So the October high here, February or the end of January, came up and retested that high at 637. Then it dropped down here to 594, rallied back up to its 20-day and 50-day moving average, and again, and couldn't get over them. And again, what used to be support, these moving averages used to be support, now they are resistance, and they are very tough dudes sometimes. So the Qs tried to punch through these moving averages, couldn't do it. So far they couldn't do it. So now they're trading in a range here between about 615 up here, where the 50 days coming in, and about 594 down here. So that takes us to where we are now, trading just on the lower side of that range at 602. So we got a a somewhat clear picture here of what we're going into with next week. It depends on a lot of things next week. We have potential resistance again at the 615 zone, then up to 628 up here, and then of course up to the highs at 637. And then we have potential support down here. We're getting close to the 200-day, but anyway, we have potential support at 595, then 588 right down here at the 200-day moving average. And we also can look at the November lows back here at 581. So some potential support here for sure. Next week, again, we have a lot going on, and please do know that we do have Adobe coming out next week and Oracle coming out next week, and I'm going to talk about that again in just a minute. Okay, our last chart today is a daily chart of the Global X Cloud Computing ETF, symbol CLOU. I'm just going to call it the CLOU as we talk about it. It has 37 holdings. Top holdings include Akamai, Digital Realty Trust, Twilio, Zoom, and Dropbox. Now, when I captured this chart today, the CLOU was trading at $19.82. Now, since it moved down in the last couple of months, it is trading at an inverse to its moving averages. The major moving averages are inverse, I should say, to themselves almost, with the 20-day moving average, the red line, down here now. Now, the CLOU managed to climb over that in the last few days, but the red line is coming in down here at $19.16. The 50-day is coming in here at $20 and change, and the 200-day moving average is coming in here at $22 and change. So you can't do this here. I mean, I don't have it here on the screen, but if you look at a longer-term chart, which I many times do, as you know, you'll see that the CLOU made an all-time high in 2021 at $32. And of course, that's not on this screen, but it made an all-time high on 2021 at $32. Then it fell, and it fell all the way down to, fell like a lot. It fell all the way down to 15 in 2022, because AI was taking over, after all. Then rose to recent highs here in October. So it rose to recent highs here in October to 24 up here, 24, made a slight dip, then came down and retested 24 again in November, then fell down to 21 down here later in November, then rallied to 23 in December, then fell all the way down into 18, and look at it, went sideways for a while, walked along its 200-day moving average, but it made a lower high here, couldn't get over the 50-day here, couldn't get over the 50-day a little earlier in December, so couldn't get over that moving average here in December, so then it made lower highs, that's always a giveaway, and broke down hard to this low that it made in February at 18. That was a couple of weeks ago, and from there, though, it turned around and rallied to where we are now, again, at $19.82, and that is actually 16% below these these highs up here. It's not all time, but below these highs here. So it's 16% below these highs, and of course more than that below the all-time highs. So if in the coming week, it looks, the cloud stocks did sell off. And I'm sure you're aware of that. Went along with the software stocks, which I will talk about in a few minutes. But I'm looking here at this as a possibility. Please know that if I start nibbling on stocks in the next couple of weeks, or ETFs, it's going to be very, very spare. It's going to be very small positions. I've made good money. I'm sure you have too. I'm in no mood to lose it. So I'll just keep an eye on some things. I don't want to lose an opportunity, but I don't want to be FOMO either. I don't want to have fear of missing out. Because I think there's more I think there's more, let's call it excitement coming in the next couple of weeks, and I want to keep everything safe here. So, okay, so with that said, if in the coming week, if the cloud right here, trading at 1982, if it can stay above 1840, if it can stay above 1840, and if the market's behaving reasonably well, not in a big downturn, but behaving reasonably well, I will buy a very small position of the CLOU in my trading portfolio. I'm going to put my stop down here at 1775. Of course, you can make yours higher. And if and when the cloud can rise above 21, that's above its 50-day moving average. So if the CLOU in the next couple of 3 weeks, however long it takes, can rise up and above 21 and close above it, I will add to my position, and by then, of course, my stop will be a trailing stop. So you may want to keep an eye on the CLOU, the cloud, in the coming week. Now, I want to add to this comment that we made last week about the IGV, the software ETF, and I told you that I would like it if it got above 83 and closed above it 3 times, which it did. Now you can look at your own chart on this one. I'm not going to bring it up, but the IGV right now is trading at about $87. It's come off its lows. Actually, it's a kind of, not exactly, but a kind of similar pattern to what we're looking at right now with the CLOU. So I do own a small position, as I said I would, of the IGV. I do have my stop in at $80, as I said earlier. Now, if the market gets more volatile, I may sell that. I like it I like the IGV as long as it stays above $83. If it heads down lower from that, I'll probably get out. And also, I want you to know, talking about software, know that Oracle is going to announce earnings next Tuesday after the close, important software, and again, Adobe is going to announce earnings on Thursday after the close, another, of course, very big software company. So make sure you're watching on Tuesday and Thursday after the close for those 2 earnings announcements, because it will definitely affect the software ETF. Okay. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. Trade the Trend to Profits, right here, Trade the Trend to Profits, shows you how to take bigger profits out of the market over and over again. And you can use this ETF training, or excuse me, it's not ETF training, I'm sorry, you can use Trade the Trend to Profits to give you strategies for the trade we're in right now, or if we get into it, the trade we might get in next week with the CLOU or possibly the IGV. So you will learn how to buy a stock or ETF in the early stages of an uptrend, how to manage it as long as the trend is in place, and at the right time, you'll learn when to grab your profits. You will buy low, sell high, and do it over and over again. And you'll know when to buy and how to manage your position. Our new low price for this program is only $127, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 steps to successful trading, how to swing trades successfully, how to trade the trend to profits, one of my absolute favorites, how to read charts, great for novices, 3 winning setups, perfect for short-term traders, and how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you'll have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen right up here, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.